All right. Oh, here we go. Nvidia earnings day. Oh, snap. It's gonna be crazy. Nvidia earnings. Nobody knows Nvidia earnings better than we do. Well, folks, welcome back. It's another one of those earnings days. Yes, one of those days where everybody's been waiting for the data. Mostly because we can't get data out of the White House, because they don't want to show us how bad things actually are. And instead, now we're all going to hang our hats on Nvidia. Can we get to $300? Can this be the greatest beat of any company ever in the world when expectations are so high? Now, in fairness, we've come off some all-time highs here already for Nvidia, so, who knows? Maybe we have to be a little modest with our expectations, but nah, screw that. It's Nvidia. We're going to the moon. At least, hopefully. Obviously, expectations really high for Nvidia. Not just the demand coming from, 40% of their demand coming from Microsoft, Facebook, Meta, Google, but the demand coming from all the data center developers, IREN, NBIS, CoreWeave, Supermicro to some extent, even though they've got
little PP.
We've got a 30% chance of rate cuts. So we can't bet on rate cuts to keep this market booming, which means we're going to have to rely on Nvidia. Will Nvidia save the day? That's going to be the question. So we're going to look at the current estimates for Nvidia as well. Looks like we'll have a few different earnings sets here also coming through. Nvidia earnings, we're going to be looking for $1.25 on EPS. We're going to be looking for GAAP EPS of 1.2. We're going to be looking for revenue of 55.19 billion. And we're looking for a net income of $30.88 billion. And then, of course, we're not only expecting to beat estimates, but the big question with Nvidia is always, how much did they end up beating by? That's one of the games you have to remember with Nvidia, is that it's not a matter of them beating. We already expect that they're going to beat. So don't come here and be like, oh my God, Nvidia beat. I know. They always beat. It'd be really bad if they miss. It's a matter of how much did they beat by. So we'll look at the, we'll have the Nvidia Investor Relations page up. They don't report, though, until 4/20. Classic. So we will get their earnings a little bit after some of the others. So another one we're going to be getting is going to be PAN-W, Palo Alto Networks. So we'll be looking at Palo Alto Networks at 405. We'll be looking at Jack in the Box at 405 as well. So 405 for Palo Alto Networks, 405 for Jack in the Box. Then we have, let's see what else is reporting. That's kind of it. And then Nvidia. So nothing super exciting there. I mean, who knows? Maybe you're really into Palo Alto Networks. So Nvidia seems to be doing well into the close here. Last minute of trade coming up. And you're closing out here at 186, up about 2.9% on the day, heavily driven by desires around Google. Google running as much as 6% intraday, though bleeding down to only 2.9% in the day. Dell actually down 2.8% here. So even though they're near, some of the highs that we've had on the week chart, you've certainly had a bit of a sell down here the last couple weeks. So can Nvidia break $200? AMD, let's see if we held on to 232 today. No. We did not hold on to 232, down to 223. Today's not only Nvidia's earnings day, but we also have coupon code NVDA. Guess what? Expiring today over at meetkevin.com. Get that Meet Kevin Alpha membership. Meetkevin.com. Use coupon code NVDA. Tesla looks like it's going to end roughly flat. 10 seconds to the close. Let's go ahead and get the bell. And then 20 minutes to Nvidia earnings, closing up 2.9%.
To this Nvidia earnings report. So the Dow is going to go out green. We had a nice little move into the end of the day. S&P and the NASDAQ are as well. Nvidia looks pretty good going into this number. We're now going to see whether the rubber meets the road. And for that, you stay tuned to Overtime with Morgan and John.
That's the end of regulation.
All right. There it is. Stock market closed. We are now going to be looking for Pan W, and Jack in the Box. Jack in the Box, let's take a look at it. Jack in the Box runs into the close, up 91 basis points. You look at the day chart, though. Wow, look at the bleed on Jack in the Box. This is the week chart. That's COVID. It is lower than COVID right now. Holy moly. That's actually pretty surprising. But the consumer's just been whacked. So, I mean, if I put it at the COVID low over here, I have to zoom over to not screw up the numbers over here. Let's do just a little retracement look over here just to compare to COVID. That's crazy. And, it's perfect. Okay, great. Wow. Look at that. Complete bleed out on Jack in the Box. This puppy's now sitting at a $271 million market cap. That's it? And it has a negative price to book ratio? What? What happened at Jack in the Box? Man, dude, this has meme potential, honestly. It is so cheap. This has meme potential. Jack in the Box, investor relations. Wow. All right, well, we'll get their numbers in just a moment. But what's going on with their financials? I'll just look at their old one really quickly. Let me just get an old balance sheet. So what's going on? Are they balance sheet? They've got current liabilities of $432 million, and they have no money. Oh, they're out of money. Oh, Jack in the Box is out of money. No money, honey. Wow, yeah, they actually have a lot of long-term debt too. They have twice as many current debts as no wonder their price to book is negative. They have no book. Holy smokes. Now, they were profitable in the last quarter, but their cash flow is probably negative. Cash flow, 212 in cash flows. And where's plant, property, and equipment? No plant, property, and equipment. Oh, there it is, plant, property, and equipment. Losses on plant, property. This is an interesting way to put a cash flow statement together. Whatever. So Jack in the Box has gotten hosed. Greenwood Investors files $13K on Jack, reports 6.1% stake. Dude, you could buy cheap, or Jack in the Box cheap right now, but I feel like you're financing so far a bad balance sheet. Although, that's what meme stocks are all about. Often, not always. GameStop is starting to look juicy too. Look at Pando. Pan W? Oh my gosh, the run this puppy has had has been beautiful. So let's see what we get on those. Earnings for both of these will be out in about 90 seconds. So who's at a 12% dividend? Is that Jack? Dude, they can't afford a dividend. Let me see here. Are they paying a dividend? No, they're not paying a dividend. They're not paying a dividend. What about them over here? I don't think they're paying a dividend. Yeah, they're not paying. There's no dividend. What are you smoking in the chat? Who are you smoking? What are you smoking today? All right. Friends, Romans, countrymen. Buy the Meet Kevin Alpha report. All right. Come on, buddy. So we're getting Pan W, Palo Alto, and then Nvidia. We're expecting a rocket ship. What is the implied movement? 7%. 7%, 186 times 1.07. That only puts us at 199. I think they could get to 200. But the question is, will it be a profit take move, right? Nothing like Meet Kevin slurping his coffee. Oh, people love that, don't you? No, it actually drives me nuts too. I try not to do that. I love y'all. Try to take care of y'all. All right, you ready? Let's get Palo Alto and Jack in the Box. Here we go. We need like a pending news sound. All right, and now we're gonna report Jack in the Box earnings. Jack in the Box revenue meets estimates, but the stock is falling. Stock is falling down 2.85% on Nvidia earnings day, as we await Nvidia earnings in 15 minutes. Okay, that's all it says. It literally just says meets expectations. Revenue, negative 6.6% year over year. So they slightly beat. Comp sales, bro, they're tanking, bro. Comp sales, 5% down. Franchise comp sales did even worse, 7.6%. Wow. That sucks. And the stock's now going down even low. Oh my gosh. I gotta zoom out just to see that line. Jeez whiz. All right, so comp sales worse than expected. They need I wonder how they're financing themselves to stay in business, honestly. Oh God, it fell even more. I gotta zoom out even more. Oh dear. Down, like there's so little movement on Jack in the Box. Yeah. All right, somebody just donated $2. Oh, well, you know I'll answer your question if you donate money. I mean, I'll take off my clothes too. All right, what is it? How much caffeine do you have in a day? Yes. No, I don't know, like 5, 6 or 7 cups of coffee? Somewhere around there. 5, 6, it depends on the day. If I only have 3 cups of coffee, it doesn't work well. I fell asleep. All right, so Jack in the Box, still no Palo Alto. Where's Palo Alto when you need it? Fine. While we wait for Palo Alto and Nvidia, because Nvidia reports in 14 minutes, let's go look at the new Jack in the Box investor relations. Somebody's like, the shorts must be happy on Jack in the Box. Bro, I don't even think there are shorts on Jack in the Box. Like, it's so bad, like, nobody cares. It's, you know, it's so bad when people don't even show up to short your stock. Yeah, but I mean, look at this. These are the numbers where, dude, they have accelerated their collapse. Look, last year, they were at negative 2.2% on company-wide sales. Now, company-wide sales are negative 5.3%. They closed 47 franchise stores. Wow. And then we have same-store sales decline in the fourth quarter. Sales performance was driven by transactions and unfavorable mix, offset by menu price increases. You're still raising prices, you morons. Don't you get it? People don't want you to raise prices. That's why you're getting reamed, because you keep raising prices, you morons. Down 7%. Palo Alto earnings, still not out. What is this crap? Nvidia, we're waiting. This is boring. Fourth quarter adjusted EPS 30 cents versus 45 expected on Jack in the Box. Jack in the Box just getting reamed, and they have no cash. I mean, that's probably the worst part. They're freaking out of money. Because that's how you go bankrupt, right? Or they'll just get acquired by somebody. But who wants to acquire a business right now? Who wants this crap? I mean, let's see if the balance sheet got any better. This was the previous balance sheet right here. And you all know how I feel about the balance sheet.
Kevin is much more interested than most people, by the way, in the balance sheet.
Somebody says, did you see UPS offering a 10% discount for employees? You know, any company can do that. It's called an employee stock purchase plan. That's a pretty normal employee fringe benefit. Accounts receivable, restricted cash, I got 220 right here. Recent grad just applied, interviewed for a position at Wells Fargo Corp. Got my interview in 4 days, and they want it filled before Xmas. It's to assist margin calls. Holy shit. Are you serious? Dude, that's crazy. That's crazy. Dude, first of all, I did not think somebody would come into my chat and donate $10 to tell me that they need to help Wells Fargo on margin calls before Christmas. What kind of Santa Claus are you? You're applying for the damn Grinch position. You may as well show up in a green mask. That's evil. Somebody says, LOL, Calvin, keep the clothes on. Can you look at fat? Oh, isn't that the restaurant group? I feel like that's a conglomerate. I'm looking at Jack right now, and then I'll look at fat. But I'm still waiting for Palo Alto to come through, and where's Nvidia? Somebody says, I've been watching you since 2020. Yeah, well, where were you in 2019 when I needed you? I'm just kidding. Thank you for joining. All right, so, here's Palo Alto. Palo Alto sees, let's see here, boost forecast. Q3 forecast, barely. No, that's at expectations for Q2 forecast is at expectations. Q1 slight beat, 93-cent adjusted EPS versus 90 cents, 2.5 billion versus 2.46. This is a slight beat. They didn't miss, so fine. Pans out. Would appreciate a review on 2UA, TA improving. Who the hell is that, TUI? Let me finish. Jack. So Jack, let's look at their debts. Where are the debts? Current debts here. Dude, they're pancaked, bro. They have leases to pay of $159 million. They have debts to pay of $170 million. They got maturities of $30 million. They have accounts payable of $71 million. They have no money. They're screwed. So how the hell are they paying dividends? How dumb are you? Repayments, I don't know where they're getting this cash from, but they're out of money. They have some cash flow, in fairness. Cash flow from operations. Oh, well, they got free cash flow, $80 million of free cash flow. Well, but over what time frame? For the whole year. The whole year, they have $80 million of cash flow, but they're upside down to the tune of $200 million in cash. This company has no damn money. They're out of money. And then Palo Alto, barely, skates by here. And so, of course, you're getting a red candlestick because what do people do? When the company skates by, what they do is they sell. Fat. Now, who the hell is fat? So, Fat Brands. What kind of name is that anyway? Fat Brands, Investor Relations. I don't know who this is. Leading global franchising company. Oh, that looks so good. Fat Burger, Marble Slab, Johnny Rockets, Twin Peaks. Oh, Great American Cookies, Smoky Bones, hot dog on a stick. Wow. Dude, I'm so hungry right now. I have not eaten since 7 p.m. last night. And I would love some food right now. But, yeah, man. I mean, I'm sorry. Jack in the Box sucks. So, Jack in the Box is going bankrupt. They have annual cash flow, but they have way more bills. So, Jack in the Box, bad financials, press release. Earnings release 11/19. So Jack in the Box, absolute ass. Palo Alto skates by. Now somebody's donating for me to look at fat. And then somebody else, I can't remember. Was it TUI or TUL? I don't even know what that is. Fat Brands. 10 earnings 11/19. I just want Nvidia earnings right now. I'm pissed. Because we're not getting my rate cut in December. You know me and the Fed. We go back, baby.
Data dependent.
All right. What is this fat stock? What is this crap? Oh, I saved. What the hell is cleansing material? What is that? Who files an AK for cleansing material? What are you cleansing? What is this? You can't make this up. I look at the financials for fat, and all I get are cleansing materials. That sounds like a scam. I don't want to be cleansed. I want to make money. Did I mention the coupon code expires tonight? It's coupon code NVIDIA, NVDA. You got to use the ticker symbol. Earnings report. This is the fat 10Q. Somebody says they're getting killed investing in fat. It's because somebody made Ozempic. So, let's see here. TUI listed on German market. Oh, the Germans. You want to look at the Germans? 9! Well, I got 5 minutes until Nvidia. So let me look at fat first. Fat. What do we have here? So they refinanced debt. They took out about another $12 million of debt. They issued shares. They have negative cash flow from operations, negative $60 million in 9 months. I've got... Bro, they spend more money than they make. Well, no shit, you're getting killed. Total costs, $157 million. Outlook on crude oil for the rest of the year 2026. It's all recession dependent, bro. If you could get the Chinese to actually pump up their demand, you'll see oil prices go up. If we don't go into a recession, oil prices go up. We go into a recession, you're going to see $30 barrels of oil. Not negative again. That was crazy. Anyway, total revenue, 140. How are they spending this much? This is insane. Cost of restaurant and factory revenues, G&A. Dude, their G&A skyrocket. Well, it's up like 8 mil. We do have depreciation in here, but even if I add back in depreciation, this is not a profitable business. They've been losing money for as long as I can tell. Like, they're not cash flow positive. They're losing money. And what's their balance sheet look like? Total assets, $49 million. That's all their assets. What are their current liabilities? What the hell? Thousands. That's 49 million. What? What the hell? How do they have $1.5 billion of current liabilities and $49 million of assets? Something has to be wrong here. This doesn't make sense. How do you have long-term debt due in the next 12 months of $1.2 billion and you have cash of $2 million? What? What? This is what's wrong with the economy. 2 million in cash, boys and girls. 2 million in cash. 1.2 billion due in the next 12 months. There's no fat. This is the opposite of fat. This is bankrupt. Bankruptcy. That's what this is. Bankruptcy. That looks like absolute ass. And not fat ass either. Like shitty ass. Sorry, I shouldn't say that. So anyway, what was it? TAI or TUI? I don't know. I only got like 2 minutes left. Do not have time for all this. What is this? I see a Kevin crash out. That means sell. You only donated $1.99 to say Kevin crashing out? That's sad, man. TUI. I'll take it though. Thank you. Thank you. You need TUI investor relations. We are so close to Nvidia earnings. We will not miss Nvidia earnings to look at some smiley face TUI group crap. What is this? It's literally a smiley face. Is this like a travel thing? Euros? The hell is this? Financial results? Better get, I don't want your words. I want your statements. Q3. What is this? It must be a travel company. Quarterly statement. Presentation. I don't want the presentation. I just want the statement. Oh my lord. What is this? I don't even know what it is. Some European booking company, huh? Okay, what do we got here? Wow, dude. Cruises really popped off year over year. Oh, so they must... I don't know. I don't have time for this because we're about to look at Nvidia. But, I mean, they're growing revenues. I mean, look at that netted, that EBIT. That EBIT exploded almost 50%. I mean, this is a bet on the consumer. So you have to be careful betting on the consumer right now. But they're making money, dude. Occupancy's up. Cruises are up. I mean, this is way better than fat. Dude, I need to make like a bankruptcy video on fat. Near-term guidance. Initial positive indications in July. Be careful, man. I don't know. Everyone's talking about the consumers in Q4 going poops. Fat brands. How much are they selling for these days? Market cap, $18 million? Dude, you could buy... Dude, House Hack could fart a fat brands. How are they... Well, yeah, because they're basically bankrupt. That's the worst balance sheet I've seen in my life. All right, ready for Nvidia? All right, boys and girls. It's time for Nvidia. Remember, we expect them to beat. It's not a matter of them beating. It's a matter of how much are we beating by. I want to see trillions of dollars, baby. Trillions. Pump my bags, Jensen. I want trillion. Here it is. Revenue. 65 is the guidance. That's good. Gross margin of 73.6. It's good. So we knew it would be a beat. Revenue comes in at 57 billies, baby. $57 billion. The estimate comes in at 64, and the market was looking for 62. They beat the beat. Nvidia beats the beat. They win again. Oh, thank goodness. We can pump the market. Adjusted EPS of $1.30. Oh, it's so good. Data center revenue at 51.2 versus 49. Pump the bags. Q3 data center revenue 51.2 versus 49. Q4 revenue 65 billion is the guide, plus or minus 2%. The estimate was 62. Okay, 62 was the estimate. We got 65. We beat the beat by 4.8%, baby. Beat the beat by 4.8%. It's delicious. We're going to 200, boys and girls. We're going to the moon. Back to 200. You see this blue line right here? That's where we're going. Nvidia Gens. Oh, talk dirty to me. Blackwell sales are off the charts. Oh, yeah. Up 4% now. Quarterly cash dividend of 1 penny. Oh, yeah. Cloud GPUs are sold out. We're sold out, boys and girls. I told you, Jensen's the salesman you do not bet against. You do not bet against the salesman. He is the salesman of salesmen. Gross margin comes in at 75%. The estimate was 74.6. GPUs are sold out. I've got networking revenues of 8.19 billion versus 7.75 expected. Pump it, baby. Nvidia investor relations. Come on, baby. I need it. I need all-time highs. Please get me to 210. Please, baby. Just one more time. One more time at 210. Let's look at the CFO commentary. Talk really dirty to me in the CFO commentary, please. We're now up 4.6%. We're really doing well here. All right, we're going to go Nvidia CFO commentary. Blackwell Ultra is now our leading architecture. Oh, yeah, because that's where the margins are. Now, the real question is, are people going to actually pump this puppy, or are people going to take their profits, take their chicken tendies and run? We'll find out. Okay. Let's see what we got here. Oh, yeah. Up 4.6% now. Let's look at the numbers. Oh, the numbers are so good. We beat the beat. Beat the beat by 4.8%. 4.8%. 65 bill guide on 62 estimate. Question now is, do people take profits, right? We are... H20 sales insignificant. That's the China stuff, right? And then we have cloud GPUs sold out. We also have Ultra is now leading architecture. Okay, so gross margin. Look at the increase in gross margin. So good. So good. Nobody knows pee-pee better.
Big pee-pee.
Okay. Automotive, or not automotive, revenues were up 62% from a year ago. 22% sequentially. Oh, it's so good. It's so good. Do you know what the annualized rate of that is? 88%. Annualized growth. Massive PP.
Big PP.
Data center revenue up 66%. Gaming revenue up 30% from a year ago. That's great. Gaming revenue was down 1%. Oh, that's odd, as the channel inventory normalized going in to this season. Okay. Automotive revenue only up 1% sequentially? Oh, that's terrible. That's some bull crap. Bull crap. This is my new favorite FSD play. What do you mean 1% sequentially? Crap. That's what that is. That's crap. Okay. So, balance sheet. Bro, I don't even want to look at the balance sheet. It's so good. It is the opposite of fat brands. It's actually fat. Wow. Okay. So let's see here. R&D, pop the R&D up. Bro, they cut their sales. I mean, they don't even need to sell. They have Jensen. What do you need a sales force for when you have Jensen? You don't need an army of people going selling the product. You have Jensen. Gross margin, operating expenses. We don't have all the details on the forums yet. Okay, let's go get another one because they have a few statements that they release. Oh, it's so good. I can't keep it together. It's very hard. Please. While I pull this up, shout out to those of you using the coupon code and signing the Meet Kevin Alpha membership, where I do this sort of analysis. Pretty much every day the market is open. Revenue chart. In our pre-market live streams. Technical analysis, fundamental analysis. I do it all for you. You pay once, you get lifetime access. You basically get a slave. I'll be your slave. If you pay me, I'll be your slave. I'll bend over. Whatever you need, I'll analyze. All right, what do we got? So, what is this? This is Nvidia quarterly revenue, but show me a chart. Oh, just give me a chart. But only numbers going up, please. I only want numbers if they're going up. Are the numbers going up? Wait, let me chart this. Oh, it's a giant arrow. That's so nice. Look at that. Look how fat. The numbers, they only go up. All of the numbers, they're only going up. They're all going up, boys and girls. They're all going up. Oh, they're so good. Except for auto. What is this? Why is that such a small move up? All right, how's Nvidia doing? Okay. All right. We made it within 70 cents of my lower blue line, and then we got rejected. This is some crap. I want my pump. Where's $200? I was promised 7% on a beat by volatility charts. And you're giving me 2.7? This is a scam. All right, so going back to their numbers. Back to their website, not back to December. Not Taylor Swift out here. Travis Kelce can't get Six Flags up. What good is he? Okay, so let's see here. Q3, yeah, CFO commentary. We don't have their press release yet. Why no press release? It's also a scam. Want their press release. I mean, obviously we got their earnings call coming up. But whatever. So, I'd like it if they could break down these operating expenses, because their operating expenses are up 36% year over year. But their net income is just explosive. I mean, this is such great net income, right? This is really, really good. And they could buy back so many stocks by doing this. Okay. Let's see here. H20 sales were insignificant. That's China for you. Blackwell is now our leading architecture. We saw that. Okay. Let's see. Let me see what the suits are saying. Okay, here we go. Hard to argue with the numbers. The only number that jumps out as not being significantly better than estimates was gross margin. Nvidia says it's rolling out new chips and new systems that push up company costs. That said, the ramp of Blackwell picks up sequentially, so do its margins. Let's see. Nvidia has been supply constrained. Yes. AMD, Micron moving a little bit higher. Sales outlook for Q4 significantly above consensus. But there were some very bullish on the streets people who put it at 75. Oh, what weenie babies. Way to ruin good earnings. Some weenies put Nvidia guide at 75 bill, so some are disappointed. Okay, great. Nvidia predicted sales, 65 billion. Blackwell sales are off the chart. GPUs are sold out. Compute demand keeps accelerating, compounding across training and inference. We've entered into a virtuous cycle of AI. Scaling fast. I mean, yeah. Jensen doesn't disappoint. Our boy, he knows how to pump it. What are they saying over here?
But the sovereigns are definitely coming, and it's with the hyperscalers at first. Those are the ones that are spending hundreds of billions, but the sovereigns will be quite large. And as long as there's not a political...
Oh, yeah, tell me about the sovereigns. Tell me about the kings and the sheiks, please.
So the Saudi Arabians, you know, are going to be one of many, and we've already seen, you know, a bunch of the countries stepping up for this. So...
Gil Loria, we don't see Nvidia doing a lot of large-scale acquisitions, maybe because, you know, it's risky to try, but we do see them spreading the love in the forms of billions of dollars across the software AI landscape. Is that going to be enough to fuel growth in the way that big M&A tends to when companies are at this scale and people are continuing to look for growth?
Yeah, there's no way they get any acquisition of any size approved. They weren't able to buy ARM years ago when they were much smaller. They're not going to be able to buy something now.
Well, they got blocked there. I think that was a Lisa Khan block. Good old Biden administration block. Anyway, it looks like I actually think, I hate to say it, but I actually think if AMD doesn't hit 232 by tomorrow, it's bearish. So AMD really needs to prove that it could stay on top of 232. Otherwise, it's just not, it's not as the enthusiasm we need to keep this going. So AMD 232 would be critical. Everything's basically turning green right now in the post market, including Google throwing another 94 basis points in there at 295. Bitcoin liked Nvidia earnings as well, back to 90K. Okay. So that's going to be interesting. We looked at, I mean, the Qs are doing nicely. When we get back, wow, dude, look at these bounces, man. The 595 is crazy. Although with Nvidia's beat here, unless Nvidia tanks, like if they say something stupid on the earnings call, I doubt they will. You know, Elon's really good at tanking the stock during the earnings call. Jensen's the opposite. This guy's a pumper, man. And you got to give them credit because they deserve it. So, you know, I'm going to be bullish on the earnings call. Jack in the Box bleeds another 7%. Fat Brands is a dead man walking. And yeah, there we go. Back to about 3.5% on Nvidia. Waiting now for their earnings call. Let's go grab what the Doomers have. Okay.
A move in Nvidia is the size of the GDP of a small country, so this stock certainly matters and will always be, you know, a key and core player here. But I do think that the trade will expand.
Any potential risk?
27 minutes to the earnings call.
Specific, excuse me, to the Nvidia trade that you're at least keeping an eye on.
Yeah, I think it's the overall AI tech trade, right? We saw what happened to the market in the last couple of days. There wasn't this massive catalyst. There was this pile on about concerns about margin, perhaps data, perhaps Fed not cutting, stretched valuations. You know, the consumer is going to continue.
Back to 4% right now on Nvidia. Let's go.
Earnings.
Yeah.
And if we don't get them, and if we don't see that, you know, CapEx translates to revenues and income, perhaps you have a risk in that trade.
All right, Sylvia, really great to get some time with you.
Somebody in the chat is cheering about CoreWeave. Yeah, CoreWeave getting out of no man's land. Look at this. CoreWeave was in no man's land all day today, and yesterday, and the day before, and the day before, and the day before. Well, it actually slipped into the lower low man's land over here. So finally, thanks to this Nvidia beat here, back over the 79.27 line. They ended the quarter with $60.6 billion in cash. Oh my gosh, it's so much money. Let's see here. Where's the balance sheet? Balance sheet, here it is. Wow, $60.6 billion in cash and marketable securities, partially offset by higher stock purchases. Receivables were at 53 days, down from 54 days, driven by timing of cash collections. Inventory, Blackwell, future ramps, multi-cloud agreements, Cash flow from operations, 23.8. That's amazing. Okay. Bullish.
Bullish catalyst.
You are not prepared.
Yeah, this is good. Okay, CapEx. Gap expected to be, these are expenses, 6.767 billion. Revenues, okay. This is good. Good forecast, too. Expenses, income. Yeah, we've looked at all this really already. So, very good. Now, earnings call will be out in 25 minutes. Now, the question is just, can it hold? Or will people take profits? In addition to that, we are going to be looking for, let's see, we have earnings call, CoreWeave. CoreWeave already given up a little bit here. Yep, look at that. Struggling right at the line. AMD is still pushing. Needs to get to 232 to be bullish. Palo Alto on their slight beat slipped. Although they're at pretty much all-time highs anyway, so it doesn't really matter. And Bitcoin starting to U-turn a little bit already here. What? It got to 90.6. Now at 90.4. Hold is critical. Q is still holding on to 80 bips for now. Okay, good. So, starting expected forecast. Outlook is strong. Yes. All right, what we got over here?
Competitor. Well, I am curious about that too, just the kind of the distinction between the way that the U.S. is kind of building out its AI capabilities, U.S. companies, I should say, and what we're seeing in China, which seems to be more of an open source type of model. And I think some people have kind of compared it to, say the closed Apple ecosystem versus, say, Android. So far, we're starting to see a lot of companies switch to models from Chinese makers because obviously it's just cheaper and in some cases even free. Does that become an impediment for U.S. progress?
So I think that China's release of many very high quality open models, it gives China a lot of soft power because if someone asks a question, those models will naturally reflect, say, China's perspective. And it does call into question why the U.S. we can't seem to get our act together to release more open models. By the way, just like a
right. 10... All right, I'm just looking at some other commentary here. These are just the other people sort of summarizing. Another seemingly minor detail. Inside the data center, sales of compute grew faster than networking gear. Year over year, that was a different story. Networking doubled more. Investors want to see compute growing strongly. It is. So that's fine. Micron's up, semiconductor ETF up. China basically not included in this. Yeah, a lot of people are looking at this as like, let the bull market continue. As long as people don't profit take. That would be I think that's the biggest risk right now. Profit taking. Yeah.
Companies, but the idea of companies that we don't know about that maybe are going to be a little bit more nimble than some of these behemoths.
One interesting thing that's happened is that some of the behemoths have become very nimble, and there is a mix of more nimble versus less nimble behemoths. But whereas with the rise,
I literally see people saying Nvidia just saved the market. That always makes me nervous if it gets that concentrated.
That we're very technology wave. I think there's opportunity for the behemoths to transform, and also.
I mean, I think it's great because remember what we're doing. Like I was just working with the AI team, looking at our AI product with HouseHack, aka Reinvest, and using basically the MLs that we've built and then the inference technology, which you get from the cloud service providers, to rate how much of a net worth boost you would get from real estate, right? So that way, like when you look at listings, this is just a temporary, like we're gonna make the design better. But anyway, this was just a temporary version I keep showing because I think it's so cool. We actually bought this property because we're like, this should be a net worth boosting property. And so it's really cool because, we're using Blackwell chips to train our MLs, but we're also using the cloud service providers for inference. And it's amazing because nobody's doing this. We're going to have our own valuation estimates. That'll take, a little bit longer. And then the renovation estimates is coming. And all of it's going to be driven by AI and the training that we've done as a team, which is really exciting. Nobody's doing that in real estate AI. So yeah, like if we could keep, like the best case scenario, Nvidia does not enter into some kind of profit-taking crap. That would be bad because that's going to take the whole market with it. Like I'm exposing my bias here. I want the AI boom to keep going because it's going to be huge for what we're doing with AI. And you can look at that by HouseHack. Go to househack.com or Reinvest AI. You could look at the mock-ups for these and some of the ideas that we have for scoring properties, the AI rankings, deals that are not recommended, deals that are recommended, the valuation wedge. You put your zip code in. And then, of course, this is what we're working on next is the renovations. Like you put a picture of a kitchen in or a bathroom, and it tells you, here's how much you should spend on the bathroom. Here's the material you should use. At this point, you're overspending. At this point, your net worth goes up or down or whatever. Anyway, look at that at househack.com. You can just make sure you read the offering circular. This video is not a solicitation. Read the offering circular. Every investment has risk. But I think we're just like a little baby in this whole AI space. We're priced off August 2024 real estate valuations is I feel like what we're basically priced off of. So the more the boom keeps going here in AI, the better. It's great. But, because I feel like it gives us so much upside room. It's really cool. This person put on the lipstick, huh? What is this?
Administration where they land. There was just another story out.
Wow, that's some bright lipstick.
They were actually encouraging Congress to remove provisions that would restrict sales of high-powered AI chips to China. When we talk about the transfer of technology or the sharing or sale of technology outside our U.S. borders, how seamless is it?
No, Proppy is not competition to us at all. They're at a totally different space, and we don't even think it's close.
Restrictions. Honestly, it seems really unlikely that Washington is going to...
Wow. Bad audio, crazy lipstick. I'm out of here, man. Out of here. Nvidia is now 4%. Pump it, baby.
Forward earnings. That's actually below the 10-year average of 35 times. It's also a slight premium to NASDAQ 100's multiple of roughly 26 times. But, of course, most companies are not growing the way Nvidia is.
No, right. and of all the hype around the circular AI trades, the fact that Nvidia has positioned itself as an AI infrastructure company in addition to everything else is probably more hype for everybody else than it is Nvidia. In other words, this to me, I know this is absurd, but it's almost...
No. It's going to be hype for Nvidia as well. It's fine. Like Nvidia, this is great. As long as people don't profit take out on fears of what's going on in the market, this is great. So, some weenies guided 75 bill for Q4. Nvidia guided 65 bill or 4.8% above expectations on guide. So, of course, beat and raise, that's not a surprise. Ultra equals leading architecture. We've got no significant H20 sales, no China, basically. Anything China would be bonus, though White House doesn't want it now. Biggest risk is profit taking during uncertain, market. Let's see here. We've got gross margins growing as Blackwell scales. That's obviously quite bullish. We've got 73.4% gross margin versus the 72.4% last quarter. There's your Blackwell ramp, right? I've got net income of 31,767 versus 57,006 of income. That is a percentage-wise, what is that? 31,767 divided by 57,006 equals, I was hoping the AI would fill it in. Maybe it will if I go over here. Nope. There we go. 55.7% of their income goes to the bottom line after taxes. It's so incredible. It's actually a really good. So good for them. Let me see here. What does that put Nvidia's PEG ratio at? This is the stock. Yeah, the PEG ratio is only 1.65, right? So if I take their current PEG ratio, what's their EPS forecast? If I take Nvidia PEG ratio, or they're at 4.5. Okay, so 4.51. I could run this valuation, 4.51 times 2.69 times, what's the growth rate we're expecting on this? It's going to be like 30% or something, 25, something like that on EPS. 25. I'm only doing a 25% growth ratio right now. And that's going to work out to 4.51 times 2.69 times 25. This is a $300 stock still. Yeah, 303 fair value stock. You know, as long as profit taking doesn't hit, doesn't hit, or growth slows. Biggest risk is growth slows, medium term. You know, profit take is more of a short-term risk tomorrow morning. Right, when institutions wake up and they're like, cool, thanks for the money, thanks for the dollar hollers. Ah, yeah, buddy. Yeah, this is the other thing that's cool, is this right here. Sequential revenue up 22%, 88% annualized. Remarkable. Okay, very good. Then I've got gaming. This was lame. Gaming down 1%. Basically lame outside of data centers. Now, the data center numbers, what did they do for data center? Data center was 51.2 divided by total revenue of 57. 89.8% data centers. Wow. 89.8% data centers. Remember, AMD is only about 46% data centers, which gives them room. Dude, Arrived is nothing like House Hack. I think Arrived is a high-fee scam. You know, the only thing they have going for them is that they've got, I guess Jeff Bezos knew them or something and made an investment into them or whatever. $307 million under management, and they have 900,000 investors? Dude, that's insane. That's a lot. That's a very little amount per investor. That's $343 on average per investor. That's low. Our average per investor is like 25 grand. Their average per investor is $343. And you have to pick individual properties, which means you're going to get raped in fees. It's a scam. I hate it. Absolutely hate it. The amount of compliance work and individually trying to securitize these individual properties, and then you actually picking them? You got to be kidding me. And then there are a lot of these, if I remember right, they're in overbuilt areas. I hated it. Every time I look at Arrived, I vomit. But hey, if you're interested in looking at them, make sure you look at their fees. So go to the offering circular, see what they charge for fees. Let's see. So what is this crap? We will reimburse the manager for fees of up to 2%. So who's paying this? Are you paying this? To the extent the property disposition fees. What is this? It is expected that a disposition fee of 6%, 6 to 7% will be charged when we sell it. That's a scam. They will charge a property management fee of $70 per property on a monthly basis. What is this? And this is on top of probably the other management fees. They pay Dalmore. That's for them to do the Reg A. I don't like Dalmore that much. We tried Dalmore. They had some oopsie doopsies. Cap rate. What is this? Investment criteria. Let's see. Property disposition fees. Yeah, that was the 6 or 7% we saw. Managers, affiliates. Earnings call in 11 minutes, by the way, on Nvidia. We're going to go back to Nvidia in just a sec. So look at this. Each series will pay the manager an annual asset management fee of 0.6. You're paying fees on top of fees, bro. This is insane. I mean, I have 138 results for fees over here. Appraisal fee, offering fee, asset management fee, property management fee, disposition fees, loan fees. And look at this trash. What is this? Applicable fees. 300 grand of fees for your fund? Sourcing fees? You pay a sourcing fee? Financing fee? Brokerage fee? This makes me want to vomit. The amount of fees they're charging their investors. These should all be zero. Zero fees. So don't bring me your arrived homes crap. Bring me garbage, expect to get anger. Anyway, where was I? Frickin' scam. Sorry. It's my opinion. Don't sue me, bro. Oh my God. Now I got Funkalicious scamming. Funkalicious, you're banned until tomorrow. Put user in timeout. 24 hours. Go sit in your corner. Come in here and spam, you're gonna get fired. Anyway, where were we? H20 sales were insignificant. H20 sales, insignificant. This is all going in the stock tab for course members, by the way. We have a stock tab. All our fundamental analysis goes into there. Okay, gaming revenue down 1%. I didn't like that, and I didn't like automotive. Only up 1%. This is also lame. I like them as an FSD play, but I want to see this grow. Okay. Clarity on the $500 billion scale will be key for scaling, blah, blah, blah. All right, let me see what the suits have. Okay, Hopper, UpX, cash. Oh yeah, the 60 billion in cash was insane, man. 60.6 bill in available cash. I mean, that's like 3 Teslas of free cash, right? I like this, Kevin. Hey, we're not on Grindr here, okay? Not that there's anything wrong with that, but we need to be professional here. I don't want to hear anything unprofessional.
Big PP.
Nvidia. Okay. Inventory took a jump in the quarter. Normally at chip makers, this is a warning sign. The company said ordering to secure long lead time components. Oh, interesting. Suits are concerned about jump in inventory. Nvidia says this is due to component stock up for long lead times. Lead time components, okay? That's the excuse. Got it. Compute grew faster than infrastructure. We saw that. Grew faster than infrastructure. Somebody here writes, buy the courses to get access to the after dark persona known as MEAT, Kevin. Hell yeah. All right, we've got the earnings call coming up in just a moment here. So about 7 minutes to the earnings call. GPUs are sold out. We saw that comment. Margins holding steady. No mentions of China. Body. 10 minutes or so to the call. Okay, good. Good. This is sexy. This is good. All right, time for some sailing after the earnings call. No! Stop it. No. I will not start leveling up sailing. No, Kevin. No. No. Hey, okay, yeah. Nvidia, okay, all right. Slow crawl up here, but honestly, holding on to 3.9%, it's good. It's not what we asked for. We asked for 7%, damn it. Oh, somebody writes, Huang on a minute. Oh, that's a good one. That I like that one. That's a good one. Jensen Huang on a minute. Huang. I think it's Huang. Something like that. Huang on a minute. That's a good one. All right. Yeah, just hang on a minute for the earnings call. All right, where are we going to go now? We're going to go, let's pull up the earnings call. Would you like to listen to music while you wait for the broadcast to begin? Sure. Play. Tell me if you can hear the music. Not yet. Oh, do I have to hit play again? I'm like in the lobby in Microsoft Flight Simulator. All right, we're good. We're good. We're cooking. We are ready. Nvidia, ready. Kevin not eating since 7 p.m. yesterday makes him go a little crazy. What are you talking about? Greetings from Denmark. Love the streams. Thank you for the 200 DKK. Does anybody know what I could buy with 200 DKK? 200 DKK to Freedom units. $30. Let's go. We are going out for dinner tonight. Who wants to go to cheesecake with me tonight? Let's go. Thank you. Dänemark, as we say in Deutschland. Dänemark. All right. We used to have in Germany this thing called the German Mark. I don't know why that matters. Deutsche Mark. D-Mark. Anyway, give me the earnings call. 3 minutes from the earnings call. Are you okay? You've lost weight. Thank you. Kevin, do you miss flying? Not really, because I do like takeoff and landing a lot, but the amount of training you have to do is a pain in the ass. So I was thinking about it. I'm like, what am I going to do this weekend? And I'm like, I'm going to go build a greenhouse, and I'm still building it. We're very slow on it. It's like one of those really no rush projects. And so I built it with my dad, and I'm like, ordinarily I'd have to go do flight training because to stay proficient, you should be flying every damn week to stay good at it. Otherwise it's dangerous and it's just not risking your children's lives, So yeah, I mean, there's part of me that's like, I wish I had time for everything, but I just don't. So, yeah, somebody else says, also from Denmark. Oh, that's awesome. What up? If you're international, you can also invest in HouseHack. Nobody's stopping you from investing in HouseHack, even if you're international. So without a doubt, if you haven't yet, check out reinvest.co or househack.com. I'm even wearing the old school househack.com logo right here. Had to make sure I was. Anyway, earn 5% as yield plus get upside in the stock. You earn the yield through conversion. Read more at reinvest.co to learn about our AI and our real estate and the work that we do. Same company, househack.com or reinvest.co. Okay, now, still got that music going? No, I didn't. 25. It's not a 25K minimum. I think it's 20. No, I'm saying the average that people have invested in our company is 25K compared to Arrived Homes has a $383 average, which tells me with Arrived Homes, you're getting a lot of unsophisticated investors who don't know what the hell they're doing. And they like this novelty of, I get to go buy a house with some stupid house, get to buy a slice of a stupid house in the middle of nowhere. Who cares? And then they're going to pay fees out the ass. But they don't know. Because they're not reading the Arrived Homes disclosures. They don't read that crap. Most people don't give a flying hooties. But what is flying is Nvidia.
Chew on this.
Welcome. Nice to have you. So you want to talk about lovemaking, right?
Bullish catalyst.
Yeah. All right. So the call should be beginning any moment now. Any moment. Not yet. Oh, here we go. Event loading. It's a slideshow. Okay, come on. Pump it, baby. Pump it. Pump it. Come on, Jensen. Give it to me, please. Oh, somebody's picking up the phone.
Good afternoon. My name
yeah.
is Sarah, and I will be your
Hi,
conference
Sarah.
operator today. At this time, I would like to welcome everyone to NVIDIA.
Oh, Sarah. You want to operate?
Call. All lines have been placed on mute to prevent
Hallo von Deutschland. What up?
the speaker's remarks. There will be a question and answer session. If you would like to...
Does Kevin have his shorts on with the leather jacket? You have to pay extra for that. Just join the courses at meetkevin.com and you'll see it.
If you would like to withdraw your question, press star 1 again. Thank you. Toshiya Hari, you may begin your
Oh,
conference.
Toshiya Hari. Give it to me, please.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's...
Wait, that's a guy. I thought a Toshiya was a girl. Oh, I got scammed.
Me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website.
No.
The webcast will be available for replay until the conference call to discuss our financial results for the fourth quarter of fiscal 2026. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent.
Oopsie!
During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties.
Oh,
and our
get
actual
to it, you old man. Let's go. Give me what I want to hear. I want the pump.
Affect our future financial results and business. Please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission.
Oh my gosh, bro.
All our statements are made as of today, November 19th, 2025.
Put this guy on 2X.
Information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures.
Ooh.
You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Please.
Thank you, Toshiya. We delivered another outstanding quarter with revenue of $57 billion, up 62% year over year, and a record sequential revenue growth of $10 billion, or 22%. Our customers continue to lean into 3 platform shifts, fueling exponential growth for accelerated computing, powerful AI models, and agentic applications. Yet, we are still in the early innings of these transitions that will impact our work across every industry. We currently have visibility to $500 billion in Blackwell and Rubin revenue from the start of this year through the end of calendar year 2026. By executing our annual product cadence and extending our performance leadership through full stack design, we believe NVIDIA will be the superior choice for the $3 to $4 trillion in annual AI infrastructure build we estimate by the end of the decade. Demand for AI infrastructure continues to exceed our expectations. The clouds are sold out, and our GPU installed base, both new and previous generations, including Blackwell, Hopper, and Ampere, is fully utilized. Record Q3 data center revenue of $51 billion increased 66% year over year, a significant feat at our scale. Compute grew 56% year over year, driven primarily by the GB300 ramp, while networking more than doubled, given the onset of NVLink scale-up and robust double-digit growth across Spectrum X Ethernet and Quantum X InfiniBand. The world hyperscalers, a $1 trillion industry, are transforming search, recommendations, and content understanding from classical machine learning to generative AI. NVIDIA CUDA excels at both and is the ideal platform for this transition, driving infrastructure investment measured in hundreds of billions of dollars. At Meta, AI recommendation systems are delivering higher quality and more relevant content, leading to more time spent on apps such as Facebook and Threads. Analyst expectations for the top CSPs and hyperscalers in 2026 aggregate CapEx have continued to increase and now sit roughly at $600 billion, more than $200 billion higher relative to the start of the year. We see the transition to accelerated computing and generative AI across current hyperscale workloads contributing toward roughly half of our long-term opportunity. Another growth pillar is the ongoing increase in compute spend driven by foundation model builders such as Anthropic, Mistral, OpenAI, Reflection, Safe Superintelligence, Thinking Machines Lab, and xAI, all scaling compute aggressively to scale intelligence. The three scaling laws, pre-training, post-training, and inference, remain intact. In fact, we see a positive virtuous cycle emerging whereby three scaling laws and access to compute are generating better intelligence and in turn increasing adoption and profits.
AMD above 232.
OpenAI recently shared that their weekly user base has grown to 800 million.
Wow.
Enterprise customers has increased to 1 million, and that their gross margins were healthy. Well, Anthropic recently reported that its annualized run rate revenue has reached $7 billion as of last month, up from $1 billion at the start of the year. We are also witnessing a proliferation of agentic AI across various industries and tasks. Companies such as Cursor, Anthropic, Open Evidence, Epic, and Abridge are experiencing a surge in user growth as they supercharge the existing workforce, delivering unquestionable ROI for coders and healthcare professionals. The world's most important enterprise software platforms like ServiceNow, CrowdStrike, and SAP are integrating NVIDIA's accelerated computing and AI stack. Our new partner, Palantir, is supercharging the incredibly popular ontology platform with NVIDIA CUDA-X libraries and AI models for the first time. Previously, like most enterprise software platforms, ontology runs only on CPUs. Lowe's is leveraging the platform to build supply chain agility, reducing costs and improving customer satisfaction. Enterprises broadly are leveraging AI to boost productivity, increase efficiency, and reduce cost. RBC is leveraging agentic AI to drive significant analyst productivity, slashing report generation time from hours to minutes. AI and digital twins are helping Unilever accelerate content creation by 2x and cut costs by 50%. And Salesforce's engineering team has seen at least 30% productivity increase in new code development after adopting Cursor. This past quarter, we announced AI factory and infrastructure projects amounting to an aggregate of 5 million GPUs. This demand spans every market: CSPs, sovereigns, model builders, enterprises, and supercomputing centers, and includes multiple landmark buildouts. xAI's Colossus 2, the world's first gigawatt-scale data center. Lilly's AI factory for drug discovery, the pharmaceutical industry's most powerful data center. And just today, AWS and Humane expanded their partnership, including the deployment of up to 150,000 AI accelerators, including our GB300. xAI and Humane also announced a partnership in which the two will jointly develop a network of world-class GPU data centers anchored by the flagship 500-megawatt facility. Blackwell gained further momentum in Q3 as GB300 crossed over GB200 and contributed roughly 2/3 of the total Blackwell revenue. The transition to GB300 has been seamless, with production shipments to the major cloud service providers, hyperscalers, and GPU clouds, and is already driving their growth. The Hopper platform, in its 13th quarter since inception, recorded approximately $2 billion in revenue in Q3. H20 sales were approximately $50 million. Sizable purchase orders never materialized in the quarter due to geopolitical issues and the increasingly competitive market in China. While we were disappointed in the current state that prevents us from shipping more competitive data center compute products to China, we are committed to continued engagement with the U.S. and China governments, and will continue to advocate for America's ability to compete around the world. To establish a sustainable leadership position in AI computing, America must win the support of every developer and be the platform of choice for every commercial business, including those in China. The Rubin platform is on track to ramp in the second half of 2026. Powered by 7 chips, the Vera Rubin platform will once again deliver an X-factor improvement in performance relative to Blackwell. We have received silicon back from our supply chain partners and are happy to report that NVIDIA teams across the world are executing the bring up beautifully. Rubin is our 3rd generation rack scale system, substantially redefined the manufacturability while remaining compatible with Grace Blackwell. Our supply chain, data center, ecosystem, and cloud partners have now mastered the build to installation process of NVIDIA's rack architecture. Our ecosystem will be ready for a fast Rubin ramp. Our annual X-factor performance leap increases performance per dollar while driving down computing costs for our customers. The long useful life of NVIDIA's CUDA GPUs is a significant TCO advantage over accelerators. CUDA's compatibility and our massive installed base extend the life of NVIDIA systems well beyond their original estimated useful life. For more than 2 decades, we have optimized the CUDA ecosystem, improving existing workloads, accelerating new ones, and increasing throughput with every software release. Most accelerators without CUDA and NVIDIA's time-tested and versatile architecture became obsolete within a few years as model technologies evolve. Thanks to CUDA, the A100 GPUs we shipped 6 years ago are still running at full utilization today.
This is
powered by vast
total Burry response right here.
Stack. We have evolved over the past 25 years from a gaming GPU company to now an AI data center infrastructure company. Our ability to innovate across the CPU, the GPU, networking, and software, and ultimately drive down cost per token is unmatched across the industry. Our networking business, purpose-built for AI, and now the largest in the world, generated revenue of $8.2 billion, up 162% year over year, with NVLink, InfiniBand, and Spectrum-X Ethernet all contributing to growth. We are winning in data center networking as the majority of AI deployments now include our switches with Ethernet GPU attach rates roughly on par with InfiniBand. Meta, Microsoft, Oracle, and xAI are building gigawatt AI factories with Spectrum-X Ethernet switches, and each will run its operating system of choice, highlighting the flexibility and openness of our platform. We recently introduced Spectrum XGS, a scale-across technology that enables gigascale AI factories. NVIDIA is the only company with AI scale-up, scale-out, and scale-across platforms, reinforcing our unique position in the market as the AI infrastructure provider. Customer interest in NVLink Fusion continues to grow. We announced
thanks for the $10
strategic collaboration with Fujitsu. In October, where we will integrate Fujitsu's CPUs and NVIDIA GPUs via NVLink Fusion, connecting our large ecosystems. We also announced a collaboration with Intel to develop multiple generations of custom data center and PC products, connecting NVIDIA and Intel's ecosystems using NVLink. This week at Supercomputing 25, ARM announced that it will be integrating NVLink IP for customers to build CPU SoCs that connect with NVIDIA. Currently on its 5th generation, NVLink is the only proven scale-up technology available on the market today. In the latest MLPerf training results, Blackwell Ultra delivered 5x faster time to train than Hopper. NVIDIA swept every benchmark. Notably, NVIDIA is the only training platform to leverage FP4 while meeting the MLPerf's strict accuracy standards. In semi-analysis inference max benchmark, Blackwell achieved the highest performance and lowest total cost of ownership across every model and use case. Particularly important is Blackwell's NVLink's performance on a mixture of experts, the architecture for the world's most popular reasoning models. On DeepSeek R1, Blackwell delivered 10x higher performance per watt and 10x lower cost per token versus H200, a huge generational leap fueled by our extreme co-design approach. NVIDIA Dynamo, an open source, low latency, modular inference framework, has now been adopted by every major cloud service provider. Leveraging Dynamo's enablement and disaggregated inference, the resulting increase in performance of complex AI models such as MOE models, AWS, Google Cloud, Microsoft Azure, and OCI have boosted AI inference performance for enterprise cloud customers. We are working on a strategic partnership with OpenAI, focused on helping them build and deploy at least 10 gigawatts of AI data centers. In addition, we have the opportunity to invest in the company. We serve OpenAI through their cloud partners, Microsoft Azure, OCI, and CoreWeave. We will continue to do so for the foreseeable future. As they continue to scale, we are delighted to support the company to add self-build infrastructure, and we are working toward a definitive agreement and are excited to support OpenAI's growth. Yesterday, we celebrated an announcement with Anthropic. For the first time, Anthropic is adopting NVIDIA, and we are establishing a deep technology partnership to support Anthropic's fast growth. We will collaborate to optimize Anthropic models for CUDA and deliver the best possible performance, efficiency, and TCO. We will also optimize future NVIDIA architectures for Anthropic workloads. Anthropic's compute commitment is initially including up to 1 gigawatt of compute capacity with Grace Blackwell and Vera Rubin systems.
Look at that rejection.
Anthropic, Mistral, OpenAI, Reflection, Thinking Machines, and other represent partnerships that grow the NVIDIA CUDA AI ecosystem and enable every model to run optimally on NVIDIA's everywhere. We will continue to invest strategically while preserving our disciplined approach to cash flow management. Physical AI is already a multi-billion-dollar business addressing a multi-trillion-dollar opportunity and the next leg of growth for NVIDIA. Leading U.S. manufacturers and robotics innovators are leveraging NVIDIA's 3-computer architecture to train on NVIDIA, test on Omniverse computer, and deploy real-world AI on Jetson robotic computers. PTC and Siemens introduced new services that bring Omniverse-powered digital twin workflows to their extensive installed base of customers. Companies including Belden, Caterpillar, Foxconn, Lucid Motors, Toyota, TSMC, and Wistron are building Omniverse digital twin factories to accelerate AI-driven manufacturing and automation. Agility Robotics, Amazon Robotics, Figure, and Skilled at AI are building our platform, tapping offerings such as Nvidia Cosmos, World Foundation Models for development, Omniverse for simulation and validation, and Jetson to power next-generation intelligent robots. We remain focused on building resiliency and redundancy in our global supply chain. Last month, in partnership with TSMC, we celebrated the first Blackwell wafer produced on U.S. soil. We will continue to work with Foxconn, Wistron, Amkor, Spill, and others to grow our presence in the U.S. over the next 4 years. Gaming revenue was $4.3 billion, up 30% year on year, driven by strong demand as Blackwell momentum continued. End market sell-through remains robust, and channel inventories are at normal levels heading into the holiday season. Steam recently broke its concurrent user record with 42 million gamers, while thousands of fans packed the GeForce Gamer Festival in South Korea to celebrate 25 years of GeForce. NVIDIA Pro Visualization has evolved into computers for engineers and developers, whether for graphics or for AI. Professional visualization revenue was $760 million, up 56% year over year, was another record. Growth was driven by DGX Spark, the world's smallest AI supercomputer, built on a small configuration of Grace Blackwell. Automotive revenue was $592 million, up 32% year over year, primarily driven by self-driving solutions. We are partnering with Uber to scale the world's largest Level 4 ready autonomous fleet, built on the new NVIDIA Hyperion L4 robotaxi reference architecture. Moving to the rest of the P&L, GAAP gross margins were 73.4%, and non-GAAP gross margins was 73.6%, exceeding our outlook. Gross margins increased sequentially due to our data center mix, improved cycle time, and cost structure. GAAP operating expenses were up 8% sequentially and up 11% on non-GAAP basis. The growth was driven by infrastructure compute, as well as higher compensation and benefits and engineering development costs. Non-GAAP effective tax rate for the third quarter was just over 17%, higher than our guidance of 16.5% due to the strong U.S. revenue. On our balance sheet, inventory grew 32% quarter over quarter, while supply commitments increased 63% sequentially. We are preparing for significant growth ahead and feel good about our ability to execute against our opportunity set. Okay, let me turn to the outlook for the fourth quarter. Total revenue is expected to be $65 billion, plus or minus 2%. At the midpoint, our outlook implies 14% sequential growth, driven by continued momentum in the Blackwell architecture. Consistent with last quarter, we are not assuming any data center compute revenue from China. GAAP and non-GAAP gross margins are expected to be 74.8% and 75%, respectively, plus or minus 50 basis points. Looking ahead to fiscal year 2027, input costs are on the rise, but we are working to hold gross margins in the mid-70s. GAAP and non-GAAP operating expenses are expected to be approximately $6.7 billion and $5 billion, respectively. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $500 million, excluding gains and losses from non-marketable and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. At this time, let me turn the call over to Jensen for him to say a few words.
Thanks, Colette. There's been a lot of talk about an AI bubble. From our vantage point, we see something very different. As a reminder, Nvidia is unlike any other accelerator. We excel at every phase of AI, from pre-training and post-training to inference. And with our 2-decade investment in CUDA-X acceleration libraries, we are also exceptional at science and engineering simulations, computer graphics, structured data processing, to classical machine learning. The world is undergoing 3 massive platform shifts at once. The first time since the dawn of Moore's Law. Nvidia is uniquely addressing each of the 3 transformations. The first transition is from CPU general purpose computing to GPU accelerated computing, as Moore's Law slows. The world has a massive investment in non-AI software, from data processing to science and engineering simulations, representing hundreds of billions of dollars in cloud computing spend each year. Many of these applications, which ran once exclusively on CPUs, are now rapidly shifting to CUDA GPUs. Accelerated computing has reached a tipping point. Secondly, AI has also reached a tipping point and is transforming existing applications while enabling entirely new ones. For existing applications, generative AI is replacing classical machine learning in search ranking, recommender systems, ad targeting, click-through prediction, to content moderation, the very foundations of hyperscale infrastructure. Meta's GEM, a foundation model for ad recommendations trained on large-scale GPU clusters, exemplifies this shift. In Q2, Meta reported over a 5% increase in ad conversions on Instagram and 3% gain on Facebook feed, driven by generative AI-based GEM. Transitioning to generative AI represents substantial revenue gains for hyperscalers. Now a new wave is rising. Agentic AI systems, capable of reasoning, planning, and using tools. From coding assistants like Cursor and Claude Code to radiology tools like iDoc, legal assistants like Harvey, and AI chauffeurs like Tesla FSD and Waymo. These systems mark the next frontier of computing. The fastest growing companies in the world today, OpenAI, Anthropic, xAI, Google, Cursor, Lovable, Replit, Cognition AI, OpenEvidence, Abridge, Tesla, are pioneering agentic AI. So there are 3 massive platform shifts. The transition to accelerated computing is foundational and necessary, essential in a post-Moore's Law era. The transition to generative AI is transformational and necessary, supercharging existing applications and business models. And the transition to agentic and physical AI will be revolutionary, giving rise to new applications, companies, products, and services. As you consider infrastructure investments, consider these 3 fundamental dynamics. Each will contribute to infrastructure growth in the coming years. NVIDIA is chosen because our singular architecture enables all 3 transitions, and thus so for any form and modality of AI, across all industries, across every phase of AI, across all of the diverse computing needs in a cloud, and also from cloud to enterprise to robots. One architecture. Toshiya, back to you.
We will now open the call for questions. Operator, would you please pull for questions?
All right, here we go. Q&A, baby. That guy was loud.
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster.
Okay.
As a reminder, please limit yourself to one question. Thank you. Your first question comes from Joseph Moore with Morgan Stanley. Your line is open.
Great, thank you. I wonder if you could update us. You talked about the $500 billion of revenue for Blackwell plus Rubin in 25 and 26 at GTC. At that time, you had talked about $150 billion of that already having been shipped. So as the quarter's wrapped up, are those still kind of the general parameters that there's $350 billion in the next kind of, 14 months or so? And, I would assume over that time, you haven't seen all the demand that there is. There's any possibility of upside to those numbers as we move forward.
Yeah, thanks, Joe. I'll start first with a response here on that. Yes, that's correct. We are working into our $500 billion forecast, and we are on track for that as we have finished some of the quarters, and now we have several quarters now in front of us to take us through the end of calendar year 26. The number will grow, and we will achieve, I'm sure, additional needs for compute that will be shippable by fiscal year 26. So we shipped 50 billion this quarter, but we would be not finished if we didn't say that we'll probably be taking more orders. For example, just even today, our announcements with KSA, and that agreement in itself is 400 to 600,000 more GPUs over 3 years. Anthropic is also net new. So there's definitely an opportunity for us to have more on top of the 500 billion that we announced.
Okay. The next question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There's clearly a great deal of consternation around the magnitude of AI infrastructure build-outs and the ability to fund such plans and the ROI. Yet, at the same time, you're talking about being sold out. Every stood-up GPU is taken. The AI world hasn't seen the enormous benefit yet, from B300, never mind Rubin, and Gemini 3 just announced Grok 5 coming soon. And so the question is this: when you look at that as the backdrop, do you see a realistic path for supply to catch up with demand over the next 12 to 18 months, or do you think it can extend beyond that time frame?
Well, as you know, we've done a really good job planning our supply chain. NVIDIA's supply chain basically includes every technology company in the world. And TSMC and their packaging and our memory vendors and memory partners and all of our system ODMs have done a really good job planning with us. And we were planning for a big year. We've seen for some time the three transitions that I spoke about just a second ago: accelerated computing from general purpose computing. And it's really important to recognize that AI is not just agentic AI, but generative AI is transforming the way that hyperscalers did the work that they used to do on CPUs. Generative AI made it possible for them to move search and recommender systems and add recommendations and targeting. All of that has been moved to generative AI, and it's still transitioning. And so whether you installed NVIDIA GPUs for data processing, or you did it for generative AI for your recommender system, or you're building it for agentic chatbots and the type of AIs that most people see when they think about AI, all of those applications are accelerated by NVIDIA. And so when you look at the totality of the spend, it's really important to think about each one of those layers. They're all growing. They're related but not the same. But the wonderful thing is that they all run on NVIDIA GPUs. Simultaneously, because the quality of the AI models are improving so incredibly, the adoption of it in the different use cases, whether it's in code assistance, which NVIDIA uses fairly exhaustively, and we're not the only one. I mean, the fastest growing application in history, combination of Cursor and Claude Code and OpenAI's Codex and GitHub Copilot. These applications are the fastest growing in history. And it's not just used for software engineers, it's used by because of vibe coding, it's used by engineers and marketeers all over companies, supply chain planners all over companies. And so I think that that's just one example, and the list goes on, whether it's open evidence and the work that they do in healthcare, or the work that's being done in digital video editing, Runway. And I mean, the number of really, really exciting startups that are taking advantage of generative AI and agentic AI is growing quite rapidly. And not to mention, we're all using it a lot more. And so all of these exponentials, not to mention, just today I was reading a text from Demis, and he was saying that pre-training and post-training are fully intact, and Gemini 3 takes advantage of the scaling laws and received a huge jump in quality performance, model performance. And so we're seeing all of these exponentials kind of running at the same time, and just always go back to first principles and think about what's happening from each one of the dynamics that I mentioned before, general purpose computing to accelerated computing, generative AI replacing classical machine learning, and of course, agentic AI, which is a brand new category.
The next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question. I'm curious, what assumptions are you making on Nvidia content per gigawatt in that 500 billion number? Because we have heard numbers as low as 25 billion per gigawatt of content to as high as 30 or 40 billion per gigawatt. So I'm curious what power and what dollar per gigawatt assumptions you are making as part of that 500 billion number. And then longer term, Jensen, the 3 to 4 trillion in data center by 2030 was mentioned. How much of that do you think will require vendor financing, and how much of that can be supported by cash flows of your large customers or governments or enterprises? Thank you.
Coffee. In each generation, from Ampere to Hopper, from Hopper to Blackwell, Blackwell to Rubin,
say hi to Summer and Violet.
Our a part of the data center increases, and Hopper generation was probably something along the lines of 20 to 25. Blackwell generation, Grace Blackwell particularly, is probably 30, say 30 plus or minus, and then Rubin is probably higher than that. And in each one of these generations, the speed up is X factors, and therefore their TCO, the customer TCO, improves by X factors. And the most important thing is, in the end, you still only have 1 gigawatt of power. 1 gigawatt data centers, 1 gigawatt of power, and therefore performance per watt, the efficiency of your architecture, is incredibly important. And the efficiency of your architecture can't be brute forced. There is no brute forcing about it. That 1 gigawatt translates directly, your performance per watt translates directly, absolutely directly to your revenues, which is the reason why choosing the right architecture matters so much now. The world doesn't have an excess of anything to squander. And so we have to be really, really, we use this concept called co-design across our entire stack, across the frameworks and models, across the entire data center, even power and cooling optimized across the entire supply chain in our ecosystem. And so each generation, our economic contribution will be greater, our value delivered will be greater, but the most important thing is our energy efficiency per watt is going to be extraordinary every single generation. With respect to growing into continuing to grow, our customers' financing is up to them. We see the opportunity to grow for quite some time. And remember, today most of the focus has been on the hyperscalers. And one of the areas that is really misunderstood about the hyperscalers is that the investment.
Okay, we're losing the lead. Stop the count. Just stop talking.
Not only improves their scale, speed, and cost from general purpose computing. That's number one, because Moore's law scaling has really slowed. Moore's law is about driving costs down. It's about deflationary cost, the incredible deflationary cost of computing over time. But that has slowed. Therefore, a new approach is necessary for them to keep driving the cost down. Going to NVIDIA GPU computing is really the best way to do so. The second is revenue boosting in their current business models. Recommender systems drive the world's hyperscalers. Every single, whether it's watching short form videos or recommending books or recommending the next item in your basket to recommending ads to recommending news it's all about recommenders. The internet has trillions of pieces of content. How could they possibly figure out what to put in front of you in your little tiny screen unless they have really sophisticated recommender systems to do so? Well, that has gone generative AI. So the first two things that I just said, hundreds of billions of dollars of CapEx is going to have to be invested, is fully cash flow funded. What is above it, therefore, is agentic AI. This is revenue, is net new consumption, but it's also net new applications. And some of the applications I mentioned before, but these new applications are also the fastest growing applications in history. Okay, so I think that you're going to see that once people start to appreciate what is actually happening under the water, if you will, from the simplistic view of what's happening to CapEx investment, recognizing there's these three dynamics. And then lastly, remember we were just talking about the American CSPs. Each country will fund their own infrastructure. And you have multiple countries, you have multiple industries. Most of the world's industries haven't really engaged agentic AI yet, and they're about to. All the names of companies that we're working with, whether it's autonomous vehicle companies or digital twins for physical AI for factories, and the number of factories and warehouses being built around the world, just the number of digital biology startups that are being funded so that we could accelerate drug discovery. All of those different industries are now getting engaged, and they're going to do their own fundraising. And so don't just look at the hyperscalers as a way to build out for the future. You got to look at the world. You got to look at all the different industries, and enterprise computing is going to fund their own industry.
The next question comes from Ben Reitzes with Melius. Your line is open.
Hey, thanks a lot. Jensen, I wanted to ask you about cash. Speaking of $500 billion, you may generate about $500 billion in free cash flow over the next couple of years. What are your plans for that cash? How much goes to buyback versus investing in the ecosystem? And how do you look at investing in the ecosystem? I think there's just a lot of confusion out there about how these deals work and your criteria for doing those, like the Anthropic, the OpenAIs, et cetera. Thanks a lot.
Yeah, appreciate the question. Of course, using cash to fund our growth. No company has ever grown at the scale that we're talking about and have the connection and the depth and the breadth of supply chain that NVIDIA has. The reason why our entire customer base can rely on us is because we've secured a really resilient supply chain, and we have the balance sheet to support them. When we make purchases, our suppliers can take it to the bank. When we make forecasts and we plan with them, they take us seriously because of our balance sheet. We're not making up the offtake. We know what our offtake is, and because they've been planning with us for so many years, our reputation and our credibility is incredible. And so it takes really strong balance sheet to do that, to support the level of growth and the rate of growth and the magnitude associated with that. So that's number one. The second thing, of course, we're going to continue to do stock buybacks. We're going to continue to do that. But with respect to the investments, this is really, really important work that we do. All of the investments that we've done so far, well, all the way, period, is associated with expanding the reach of CUDA, expanding the ecosystem. If you look at the work, the investments that we did with OpenAI, it's, of course, that relationship we've had since 2016. I delivered the first AI supercomputer ever made to OpenAI. And so we've had a close and wonderful relationship with OpenAI since then. And everything that OpenAI does runs on NVIDIA today. So all the clouds that they deploy in, whether it's training and inference, runs NVIDIA, and we love working with them. The partnership that we have with them is one so that we could work even deeper from a technical perspective, so that we could support their accelerated growth. This is a company that's growing incredibly fast, and don't just look at what is said in the press. Look at all the ecosystem partners and all the developers that are connected to OpenAI, and they're all driving consumption of it. And the quality of the AI that's being produced, huge step up since a year ago. And so the quality of response is extraordinary. So we invest in OpenAI for a deep partnership in co-development to expand our ecosystem and to support their growth. And of course, rather than giving up a share of our company, we get a share of their company. And we invested in them in one of the most consequential once-in-a-generation company that we have a share of. And so I fully expect that investment to translate to extraordinary returns. Now, in the case of Anthropic, this is the first time that Anthropic will be on NVIDIA's architecture. The first time Anthropic will be on NVIDIA's architecture is the second most successful AI in the world in terms of total number of users. But in enterprise, they're doing incredibly well. Claude Code is doing incredibly well. Claude is doing incredibly well all over the world's enterprise. And now we have the opportunity to have a deep partnership with them and bringing Claude onto the NVIDIA platform. And so what do we have now? NVIDIA's architecture, taking a step back, NVIDIA's architecture, NVIDIA's platform is the singular platform in the world that runs every AI model. We run OpenAI, we run Anthropic, we run xAI. Because of our deep partnership with Elon and xAI, we were able to bring that opportunity to Saudi Arabia, to the KSA, so that Humane could also be a hosting opportunity for xAI. We run xAI, we run Gemini, we run thinking machines. Let's see, what else do we run? We run them all. And so, not to mention, we run the science models, the biology models, DNA models, gene models, chemical models, and all the different fields around the world. It's not just cognitive AI that the world uses. AI is impacting every single industry. And so we have the ability, through the ecosystem investments that we make, to deeply partner on a technical basis with some of the best companies, most brilliant companies in the world. We're expanding the reach of our ecosystem, and we're getting a share and investment in what will be a very successful company, oftentimes once in a generation company. And so that's our investment thesis.
The next question comes from Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thanks for taking my question. In the past, you've talked about roughly 40% of your shipments tied to AI inference. I'm wondering, as you look forward into next year, where do you expect that percentage could go in say, a year's time? And can you maybe address the Rubin CPX product you expect to introduce next year and contextualize that? How big of the overall TAM you expect that can take, and maybe talk about some of the target customer applications for that specific product? Thank you.
CPX is designed for long context type of workload generation. And so long context, basically, before you start generating answers, you have to read a lot, basically, long context. And it could be a bunch of PDFs, it could be watching a bunch of videos, studying 3D images, so on and so forth. You have to absorb the context. And so CPX is designed for long context type of workloads. And its perf per dollar is excellent. Its perf per watt is excellent. And which made me forget the first part of the question.
Inferencing.
Oh, inference. Yeah, there are three scaling laws that are scaling at the same time. The first scaling law, called pre-training, continues to be very effective, and the second is post-training. Post-training basically has found incredible algorithms for improving an AI's ability to break a problem down and solve a problem step by step. And post-training is scaling exponentially. Basically, the more compute you apply to a model, the smarter it is, the more intelligent it is. And then the third is inference. Inference, because of chain of thought, because of reasoning capabilities, AIs are essentially reading, thinking before it answers. And the amount of computation necessary as a result of those three things has gone completely exponential. I think that it's hard to know exactly what the percentage will be at any given point in time and who. But of course, our hope is that inference is a very large part of the market, because if inference is large, then what it suggests is that people are using it in more applications, and they're using it more frequently. And that's, we should all hope for inference to be very large. And this is where Grace Blackwell is just an order of magnitude better, more advanced than anything in the world. The second best platform is H200, and it's very clear now that GB200, GB300, because of NVLink 72, the scale-up network that we have, achieved, and you saw, and Colette talked about in the semi-analysis benchmark, it's the largest single inference benchmark ever done. And GB200, NVLink 72, is 10 to 15 times higher performance. And so that's a big step up. It's going to take a long time before somebody is able to take that on. And our leadership there is surely multi-year. Yeah. And so I'm hoping that inference becomes a very big deal. Our leadership in inference is extraordinary.
The next question comes from Timothy Arcuri with UBS. Your line is open.
Thanks a lot. Jensen, many of your customers are pursuing behind-the-meter power, but what's the single biggest bottleneck that worries you that could constrain your growth? Is it power, or maybe it's financing, or maybe it's something else like memory or even foundry? Thanks a lot.
Well, these are all issues, and they're all constraints. And the reason for that, when you're growing at the rate that we are and the scale that we are, how could anything be easy? What NVIDIA is doing obviously has never been done before. And we've created a whole new industry. On the one hand, we are transitioning computing from general purpose and classical or traditional computing to accelerated computing and AI. That's on the one hand. On the other hand, we created a whole new industry called AI factories. The idea that in order for software to run, you need these factories to generate it, generate every single token instead of retrieving information that was pre-created. And so I think this whole transition requires extraordinary scale. And all the way from the supply chain, of course, the supply chain, we have much better visibility and control over it because, obviously we're incredibly good at managing our supply chain. We have great partners that we've worked with for 33 years. And so the supply chain part of it, we're quite confident. Now, looking down our supply chain, we've now established partnerships with so many players in land and power and shell, and of course financing. These things, none of these things are easy, but they're all tractable and they're all solvable things. And the most important thing that we have to do is do a good job planning. We plan up the supply chain, down the supply chain. We've established a whole lot of partners, and so we have a lot of routes to market. And very importantly, our architecture has to deliver the best value to the customers that we have. And so at this point, I'm very confident that NVIDIA's architecture is the best performance per TCO. It is the best performance per watt, and therefore for any amount of energy that is delivered, our architecture will drive the most revenues. And I think the increasing rate of our success, I think that we're more successful this year at this point than we were last year at this point. You know, the number of customers coming to us and the number of platforms coming to us after they've explored others is increasing, not decreasing. And so I think I think all of that is just, you know, all the things that I've been telling you over the years are really coming true and or becoming evident.
The next question comes from Stacy Raskin with Bernstein Research. Your line is open.
Questions. Colette, I had some questions on margins. You said for next year you're working to hold them in the mid-70s. So I guess, first of all, what are the biggest cost increases? Is it just memory or is it something else? What are you doing to work toward that? Is it, how much is cost optimizations versus pre-buys versus pricing? And then also, how should we think about OpEx growth next year, given the revenues seem likely to grow materially from where we're running right now?
Thanks, Stacey. Let me see if I can start with remembering where we were with the current fiscal year that we're in. Remember, earlier this year, we indicated that through cost improvements and mix that we would exit the year in our gross margins in the mid-70s. We've achieved that and getting ready to also execute that in Q4. So now it's time for us to communicate where are we working right now in terms of next year. Next year, there are input prices that are well known in the industries that we need to work through. And our systems are by no means very easy to work with. There are a tremendous amount of components, many different parts of it as we think about that. So we're taking all of that into account, but we do believe if we look at working again on cost improvements, cycle time, and mix, that we will work to try and hold at our gross margins in the mid-70s. So that's our overall plan for gross margin. Your second question is around OpEx. And right now, our goal in terms of OpEx is to really make sure that we are innovating with our engineering teams, with all of our business teams, to create more and more systems for this market. As you know, right now we have a new architecture coming out, and that means they are quite busy in order to meet that goal. And so we're going to continue to see our investments on innovating more and more, both our software, both our systems, and our hardware to do so. I'll turn it to Jensen if he wants to add in a couple more comments.
Yeah, I think that's spot on. I think the only thing that I would add is remember that we plan, we forecast, we plan, and we negotiate with our supply chain well in advance. Our supply chain have known for quite a long time our requirements, and they've known for quite a long time our demand, and we've been working with them and negotiating with them for quite a long time. And so I think the recent surge, obviously quite significant, but remember our supply chain has been working with us for a very long time. And so in many cases we've secured a lot of supply for ourselves because obviously they're working with the largest company in the world in doing so, and we've also been working closely with them on the financial aspects of it and securing forecasts and plans and so on and so forth. So I think all of that has worked out well for us.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question. Jensen, the question's for you. As you think about the Anthropic deal that was announced and just the overall breadth of your customers, I'm curious if your thoughts around the role that AI ASICs or dedicated XPUs play in these architecture build-outs has changed at all. Have you seen, I think you've been fairly adamant in the past that some of these programs never really see deployments, but I'm curious if we're at a point where maybe that's even changed more in favor of just GPU architecture. Thank you.
Yeah, thank you very much, and I really appreciate the question. So first of all, you're not competing against teams. You're against a company. You're competing against teams, and there just aren't that many teams in the world who are extraordinary at building these incredibly complicated things. Back in the Hopper day and the Ampere days, we would build one GPU. That's the definition of an accelerated AI system. But today, we've got to build entire racks, three different types of switches: a scale up, a scale out, and a scale across switch. And it takes a lot more than one chip to build a compute node anymore. Everything about that computing system, because AI needs to have memory, AI didn't used to have memory at all. Now it has to remember things. The amount of memory and context it has is gigantic. The memory architecture implication is incredible. The diversity of models, from mixture of experts to dense models to diffusion models to autoregressive, not to mention, biological models that obeys the laws of physics. The list of different types of models has exploded in the last several years. And so the challenge is the complexity of the problem is much higher. The diversity of AI models is incredibly large. And so this is where, if I will say, the 5 things that makes us special, if you will. The first thing I would say that makes us special is that we accelerate every phase of that transition. That's the first phase. That CUDA allows us to have CUDA X for transitioning from general purpose accelerated computing. We're incredibly good at generative AI. We're incredibly good at agentic AI. So every single phase of that, every single layer of that transition, we are excellent at. You can invest in one architecture, use it across the board. You can use one architecture and not worry about the changes in the workload across those 3 phases. That's number 1. Number 2, we're excellent at every phase of AI. Everybody's always known that we're incredibly good at pre-training. We're obviously very good at post-training. And we're incredibly good, as it turns out, at inference, because inference is really, really hard. How could thinking be easy? People think that inference is one shot and therefore it's easy. Anybody could approach the market that way. But it turns out to be the hardest of all, because thinking, as it turns out, is quite hard. We're great at every phase of AI, the second thing. The third thing is we're now the only architecture in the world that runs every AI model. Every frontier AI model. We run open source AI models incredibly well. We run science models, biology models, robotics models. We run every single model. We're the only architecture in the world that can claim that. It doesn't matter whether you're autoregressive or diffusion based. We run everything. And we run it for every major platform, as I just mentioned. So we run every model. And then the fourth thing I would say is that we're in every cloud. The reason why developers love us is because we're literally everywhere. We're in every cloud. We're in every, we could even make you a little tiny cloud called DGX Spark. And so we're in every computer. We're everywhere, from cloud to on-prem to robotic systems, edge devices, PCs, you name it. One architecture, things just work. It's incredible. And then the last thing, and this is probably the most important thing, the fifth thing, is if you are a cloud service provider, if you're a new company like Humane, if you're a new company like CoreWeave or Nscale or Nebius, or OCI for that matter, the reason why NVIDIA is the best platform for you is because our offtake is so diverse. We can help you with offtake. It's not about just putting a random ASIC into a data center. Where's the offtake coming from? Where's the diversity coming from? Where's the resilience coming from? The versatility of the architecture coming from, the diversity of capability coming from. NVIDIA has such incredibly good offtake because our ecosystem is so large. So these 5 things, every phase of acceleration and transition, every phase of AI, every model, every cloud to on-prem, and of course, finally, it all leads to offtake.
Thank you. I will now turn the call to Toshiya Hari for closing remarks.
In closing, please note we will be at the UBS Global Technology and AI Conference on December 2nd, and our earnings call to discuss the results of our fourth quarter of fiscal 2026 is scheduled for February 25th. Thank you for joining us today. Operator.
All righty. Summary time, baby. Summary time. My favorite time of the day. Summary time. And then I get off. All right. Who's ready? So let's get started. All right. Okay, cool. Here we go. Well, as expected, Nvidia earnings smash. The question is, will the smash last? Hopefully we can hang in there and make them last. That's going to be the big question. It's not going to be a question about, is Nvidia going to beat? We know Nvidia's going to beat. It's always a matter of how much are they going to beat by, and is that going to be enough to keep people attached to this market? The hope is yes. So far in the post-market, we've already rejected the 298.60 line. We do have a nice 4.6% pump here in the afters on great earnings. We're going to go through the earnings in just a moment. Do know that the entire ecosystem is pumping on this. Palantir gets a shout out on the ontology product. Great move up here. You've got CoreWeave moving up to the 79.27 line, up 7%. We got Bitcoin also trying to recover here, back over 90,000. Ethereum bounces literally right on my 28.75 line. Let's see if it can hold up. Tomorrow morning is going to be critical because we don't want to get Jack in the Box. We don't want to get grindered. Both of these are not doing too hot right now, okay? Because the CEO's over at Grindr getting margin called. Not good. Well, that's the opposite of what's happening at Nvidia. Because even though you had some weenies guiding really, really high to $75 billion for Q4, Nvidia guided $65 billion, 4.8% above expectations. And it is so good that people are looking for anything to poop on Nvidia for. And so they're coming over to the balance sheet. What people are doing is saying, oh my gosh, accounts receivable at Nvidia are skyrocketing. And it's true. Accounts receivable at inventory or at Nvidia are up 44% from 23 billion to 33.3 billion. However, let's be real, folks. That's only 18% of 1 quarter of revenue. So is it really a big deal that their accounts receivable, in other words, potentially bills that, you know, haven't been paid yet to Nvidia, are going up by 10 billion? No. This is a company with over $60 billion in cash. Does it really matter that their accounts receivable are up 10.38? No, not at all. They can wait another few weeks on their revenue, and it makes zero difference to Nvidia. So this increase in accounts receivable, not a big deal. This was a very good report from Nvidia. This idea that inventories are up up to 19.7 billion. This was a little surprising. Usually when you do see inventories go up at the chip plays, it is an indicator that you're having a harder time selling your chips. Nvidia argues that this inventory buildup is because they're wanting to build out their supply chain to make sure they have enough long lead time components to actually keep providing the Blackwell product on time. That's their argument. So far, it sounds reasonable given that we are raising to a $65 billion revenue forecast for Q4, and we expect to beat that as well. So far, NVIDIA Ultra is now the leading architecture, no significant H20 sales, so basically no China here. Gross margin increasing, not a surprise, gross margin is increasing as they're sort of buttering out their scaling costs for Blackwell. So this is positive. Now, something that you also heard Jensen say, which I thought was really interesting, was that the number of customers coming to NVIDIA after looking at alternatives is actually going up. Now, that's a big deal because a lot of people are looking at Google and they're like, oh my gosh, Google has built out their Gemini 3 product on the back of the Tensor processing unit, not NVIDIA chips. Oh my gosh, that's bearish NVIDIA, right? Well, NVIDIA is basically countering that and saying, nah, we're fine, don't worry, plenty of people are still coming to NVIDIA. Now, NVIDIA is also countering Michael Burry. They basically stopped short of saying Michael Burry's name, but they literally said, quote, our ecosystems extend useful lives. We have A100 chips from 6 years ago that are still running at 100% utilization. Without CUDA, yes, chips would be obsolete after 2 years. But because we're the shit and we have the best software to go with our chips rock. And they're still being used up to 100% after 6 years. Therefore, Michael Burry, go suck it. Okay, they didn't say the last part, but that's basically what they're saying. On top of that, basically giving Michael Burry the big middle finger, they're also saying, hey, we're going to ramp Rubin in the second half of 2026, which is already moving on from our Blackwell GB 200 to 300 technology to the next phase. Because we're getting to this annual ramp, kind of like an iPhone cadence, but we're not alienating the old stuff because that should continue to be utilized since we have a supply shortage. We can't print all the chips we want. It's kind of like, the plane analogy I've given in the past, that if you don't have enough supply of something, assets that usually depreciate over time, like planes, can actually go up in value over time. Kind of like how I sold my plane for a profit because supply chains are so tight. Now, chips usually depreciate even more rapidly, so yeah, it's a little bit wild to think that chips are still getting used. But we're seeing it as well, even with our house hack artificial intelligence, where we can actually put older chips to great use. I mean, the analogy that I gave when the earnings first came out was this comparison to this is just sort of in the background. This is a product or a company. Oh gosh, what am I saying? This is a house that we actually bought. This is just sort of in the background. We have some cleaning up to do in terms of the actual visualizations on it. But in the background, we were just testing our AI, and our AI found this on its own, scored this property at an A, and we already bought the property because it was a good deal. But to us, it just reiterated that our AI is working. And this is actually in part to what Jensen is talking about. It's sort of credit to what Jensen's saying. He says what you want to see is you want to see inference usage go up. You want more people to buy Blackwell chips, us included, at House Hack. See, I got the Nvidia jacket with House Hack underneath. We're using Blackwell chips as well, not just for training our ML, but then of course we use cloud for inference, and we're inferencing with AI as well as we ramp our AI product. So we're very excited, and we think he's right about that. And so far, there's really nothing not to like in any of these numbers. Quick disclaimer, just so I don't get in trouble, make sure to read the offering circular at househack.com/reinvest.co. It's the same company. Read that. You could see our 5% bond offering. If the Fed panics and closes or drops rates, we'll obviously drop that as well pretty soon. But you get 5% through conversion and then all the upside in the stock. Read about that and the risks involved investing at househack.com. So anyway, going back to this, they also, where I think we're going to end up going with this artificial intelligence is you'll find that LLMs will become so good that a lot of companies, like whether it's Google or Meta or Microsoft with Copilot, they'll really start advertising a lot out of their LLMs. And you actually saw Jensen directly shout out Meta talking about their AI recommendation systems and the inference usage in advertising. I actually think you're seeing some of that over at not just Palantir, but also Pinterest as well. And Pinterest, the problem is with these companies like the consumer plays is the consumer's pretty freaking weak right now. It's like the rich companies that spend money on Blackwell chips, they can afford this kind of stuff. But if you look at Pinterest on like a week chart, look at how low this sucker is. And they're a beneficiary of the artificial intelligence advertising revolution as well. So kind of interesting to see this trend line that they're literally sitting on right now. Pretty remarkable. Now, one thing that does suck right now is you don't want to invest in a company like Fat Brands. Fat Brands is basically going bankrupt in my opinion. So a big oopsie doopsie over there. But anyway, okay, so what else do we have? Then we have, if we go look at some of our other numbers over here, we have OpenAI, 800 million weekly users. That was interesting. 1 million enterprise users, and they say gross margins at OpenAI were healthy. I thought that was kind of funny because it's like, who cares about the gross margins at OpenAI? We all care about the net margins. That's what matters. Then we have Blackwell Ultra trains 5x faster than the Hopper chips. That was kind of cool to see. We saw their expectation that gross margins are going to keep holding in the mid-70s throughout the next quarter. That's good because you're actually seeing their gross margins go up because they're scaling Blackwell. Now, AMD, it's worth remembering, only makes about 46% of their revenues from data centers, whereas Nvidia is sitting at over 89.8% of their revenue coming from data centers. It's almost all data centers. Now, I was a little disappointed that gaming was down 1% sequentially, and automotive sales were only up 1% sequentially. They were up about 33% year over year, but only up 1% quarter over quarter, from the last quarter. I was a little disappointed about that. I see Nvidia as a really good sort of like robotaxi and FSD play that is reasonably valued right now. I like the valuation of Nvidia, and I think that the valuation of Nvidia does support, frankly, a $300 price target. Now, that doesn't mean that I'm super excited or optimistic about the stock market in the near term. I think we have a lot of headwinds with jobs and recession risks and otherwise. So I've been diversifying a lot to cash. I've been taking profits on some stocks, and I send, of course, those alerts in our alpha report, which you could get at meetkevin.com. We have a coupon code NVIDIA is actually the current coupon code. So coupon code NVDA is in honor of NVIDIA earnings, and that is expiring today. So you could use that over at meetkevin.com. But anyway, you've got this, the other thing that's a little funny as the coupon code phases in. I got to work on that transition. But anyway, so you've got net income. Consider this, 55.7% of NVIDIA's net income goes to their bottom line after taxes. That's insane. Because remember, they're a chip designer. Now, they produced their last with TSM. They produced their first Blackwell wafer in Arizona last month. That's kind of cool. I do think a fair value for the stock is $303. I do think there are other opportunities where you could make more than 50%, by the time we hit that. But I got to give them credit. These are really good numbers. This is very large price, great pricing power, great balance sheet. Momentum's obviously very high, so not the best, but there's really no bankruptcy risk here. And the valuation is fair. It's trading for a 1.6 peg. It could easily be at a 2.6, 60 billion in cash, plenty of room to keep buying the stock. I know some people, again, are worried about the inventory aspect, so you kind of have to look at them and be like, well, do you believe them or not about what they're saying regarding inventory? Regarding, they did shout out Lowe's. I thought this was cool. They talked about how Lowe's is using CUDA to help build out their supply chain agility. I'm a big fan of Lowe's, by the way. House Hack, we are almost exclusive with Lowe's. Big fan. We have a pro contract with them, so when we put quotes in for orders, we get huge discounts with them. So we're big fans, big supporters. We've got. They talked about their Anthropic partnership. They talked about Steam, not Stream, I misspelled that. Steam breaking 42 million concurrent users, partly in the backs of Nvidia chips. Steam, by the way, dude, 42 million concurrent users at one point. You realize that's like the entire state of California playing on Steam at the same time. Like, do you know how much Rust we could be playing if we were all playing at the same time? That's sick. Man, I got my 5090 to play Rust. Although I haven't played Rust in months. I'm a little disappointed. And I don't need a 5090 to play RuneScape. And I'm definitely not going sailing later today. Anyway, Jensen talks about this sort of next iteration of getting from not only the CPU to GPU movement, but getting into agentic AI and then physical AI. This is really a shilling of robots and a shilling of agentic AI. I don't know. I'm not so convinced on agentic AI yet, but we'll see. Gemini 3 has a lot of hope. Its cost to operate is pretty high. If you look at the pro version of Gemini and then the agentic spend, this is really what you're looking at right here. We have, there it is, Gemini 3 Deep Think Preview. Its cost to operate is like 100x the cost to operate per task, Gemini Pro 3 or 3 Pro. Now, the Gemini release could really motivate other companies to spend even more on NVIDIA chips to try to catch up to Gemini, or Gemini is just going to bankrupt companies like xAI and OpenAI because Gemini is just going to eat their lunch. We don't know. It seems binary at this point. But I think the most important thing tomorrow from a strategic and trading point of view is you have to see what ends up happening with institutions. Is NVIDIA going to keep rejecting these two lines right here? The two lines that I have are 198.98 and 196.53. The lesser of the two is this one right here. We've rejected this one and we've rejected this one. So both of them today. And these lines have been here for a while. So these aren't like secret lines or whatever. You're welcome to copy them. But anyway, how the market responds tomorrow is going to be critical because, the post-market, you're not going to get institutional profit taking. The concern is what happens tomorrow morning. Is there going to be institutional profit taking at the morning? We'll go this way. We didn't see much movement this morning on Nvidia. What happens this morning? That's going to be critical. And if there's a bunch of profit taking, then the whole sector goes down with it, especially as we essentially anticipate no rate cut. We looked at the Fed minutes earlier, and they were really disappointing because you pretty much have a Fed that's like, look, if you want us to cut, we need data. We need data.
Data dependent.
And we don't have data. So, overall, there's really nothing not to like in the Nvidia earnings. They're really good. They keep printing money. They're helping companies convert sales. Slow down. I didn't like the gaming or automotive revenues on a quarter-over-quarter basis, but otherwise, they're firing on all cylinders here. They're not reliant on China. The margins are strong. The net margins are the greatest I've ever seen. They basically shut down Michael Burry. They think they have $500 billion of revenue visibility through the end of 2026, which is a huge pipeline of visibility. And so really the only thing to be concerned about is basically institutions coming and saying, cool, all right, like this is the top. Let's take our money and run. But beyond that, there's nothing that NVIDIA said that I think is really nerve-wracking. And so it's really just going to go back to market sentiment at this point. But broadly, I'm pretty excited about it. And I kind of feel honored that, we chose NVIDIA Earnings Day to do an expiring coupon code. And the coupon code is NVDA. Remember, you could get a tax write-off before the end of the year by joining. Very likely. Talk to your CPA about that, of course. No guarantees. Every trade alert, all the 8 courses. We've got a new one coming out as well, which you will get access to that as well, totally for free, once you're a part of the Meet Kevin membership. You get every private live stream, the Alpha Report, and you'll also get a big fat discount on our House Hack AI if you join the Meet Kevin membership. So you'll get a discount on the AI. You'll be able to get it for a lot cheaper if you are part of the Meet Kevin membership, which is kind of cool. Somebody here writes UiPath for agentic AI. Dude, thanks for the $10 donation, but you have to remember that UiPath was AI before it was AI. They were trying to do process automation for you when AI was still considered deep learning and big data, right? The problem is now everybody can put together the pieces of puzzle like UiPath. So UiPath really has to prove that it is somehow better AI than like Gemini X, XAI and Copilot, and somehow better than all of the other agentic services. And so it really takes process automation and turns it into a moded product to a non-moded product. That's your big problem with UI. And I think a lot of people have hope for it, but that's as long as you are comfortable that they have a moat, maybe there's a shot for UiPath, right? But that's what you have to look at there. So somebody here says, nothing is good and perfect. I don't know what you're saying. And then I talked about the competitors, right? Yeah, we talked about the competitors, how they're seeing competitors to NVIDIA or customers who are looking at competing products actually come back to NVIDIA and they're like, yeah, no. We just want the NVIDIA chips. So pretty optimistic there. Looking at some of your other comments here. Bye, kids. Be careful investing out there, says someone. Everyone is hanging on productivity gains from AI. NVIDIA shows us that. Market probably moving up now, no? I mean, I don't know that a lot of people were expecting NVIDIA to miss. Yeah, Jensen's a really good salesman. So we should have a green day tomorrow unless you get profit taking, right? All right, folks, we'll put together a plan of the Alpha Report tomorrow. Remember, if you join today, you can be part of tomorrow's Alpha Report, and we'll see you there. So thanks so much, and we'll see you in the next one. And make sure to go to househack.com to learn more about investing in HouseHack. Read the offering circular, because there's risk with every investment.